Hello and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I'm back to deliver your local real estate news for the week. I'll go ahead and jump right on into these slides. So today is February 24th, 2023, and let's find out what happened this week. Or actually, what is happening this week? Because this week is my renovation loan workshop, Monday evening at 6 p.m. at Brewmaster's Taproom in Renton. Amanda, the loan officer that serviced the loan for my house, is teaching this class with me, and I am so excited to share the journey that my husband and I took to purchase our first home. This was a great process to go through. Oh my gosh, we learned so much, and I cannot wait to share it all with you. So if you are one of those HGTV fans that loves watching those renovation shows and always dreamed about doing it yourself, you have to come Monday night. Make sure to register because space is limited. The following week, March 6th at 6 p.m., there is a webinar for home buying for nurses and teachers. This actually includes first responders, sheriffs, police officers, anybody in that kind of industry. So it is a great loan program, and I'm super excited to share all of that with you on the following Monday. So into the news, out of Puget Sound Business Journal, percentage of all cash home sales grows. In Seattle, a year ago in December, we had about 16.8% of homes that were being purchased through a cash offer. Now that is up to 19.4%. There's a few different reasons for this. 5.5% of the Metro's home sales in December use an FHA loan. This is a government-backed loan that accepts lower minimum credit scores, lower down payments. So the FHA loan is not always, but oftentimes used by people that have a little less cash on hand to move forward with their purchase. And we're seeing that number be pretty small compared to our almost 20% of cash offers. So the report said all cash purchases are common in competitive markets as it motivates affluent buyers to pay cash to entice sellers to accept their offer. So this is part of the truth, but with the higher interest rates, people may not want to take out a loan if they have another option. When the interest rates were super low, even if people could afford to pay cash for a home, a lot of times they would finance it if they weren't going up against a multiple offer situation, just because they wanted to keep their cash on hand, pay the lower interest rate because they could make more money with that cash elsewhere. But with the higher interest rates, it is more likely that it makes sense to put more cash down. Redfin said that 24.2% of purchase offers in Seattle had a bidding war in December 22. Compare that to a year before, 70.6% of offers were competing in bidding wars. So almost all offers were part of a bidding war situation in December 2021. Fast forward a year, it's only a quarter. As of January, the median home sale price in Seattle was $760,000, a 4% year-over-year increase, while the number of home sales dropped 43.9%. And we did get our consumer price index numbers about a week ago. I was gone last week, so we're doing a little catch up here. And we have brought it to 6.4. One of the things that's really keeping the inflation rate high, good prices for a lot of goods have dropped, but one of the things that is keeping prices high are rents. So if we look at the consumer price inflation, we can see that inflation went up until kind of early mid last year, and then has been coming down ever since. But tenants' rent growth, look at this chart. From 2012, it remained fairly consistent, just ticking up a little bit. 2020, the pandemic hit and rents dropped fairly significantly. And then since that time, they have just skyrocketed. So rent growth is just blowing all of these consumer price numbers out of the water. FHA announces lower mortgage insurance premiums. I'm just going to touch on this briefly. So like I said, the FHA is often used by people with a little bit less cash or a little bit lower credit score, but not always, but a lot of the time. And on average, the cost of that loan moving forward, starting next month, is going to be reduced about $800 annually on average. The government's changing the fees So prices will come down to the end consumer. And that brings us to our Market Stat Minute. We had 503 new listings in the past 7 days in King County, 649 pending, and 412 sold. So our pendings is still outweighing our new listings here by a pretty big chunk, but we did drop down on our pendings from a couple of weeks ago. And that is due to our little bit of higher interest rates that we've been seeing, which we'll touch on in just a moment. And for our local area breakdowns, every area has more pendings than new listings. So this is decreasing inventory across all these areas. But look at Auburn. Auburn only had 10 new listings come on compared to 38 pendings. That's probably the biggest. Federal Way is not much ahead of that with 15 new listings compared to their 38 pending. Renton and Kent, they have a few more listings coming to the market percentage wise. So there may be a few more options in the Kent Renton areas as compared to Auburn and Federal Way. And last time we met, the weekly average mortgage rate inched up to 6.12 and our daily was at 6.5. Last week, it hit 6.32, and this week we're up to 6.5 for our weekly average mortgage rate. For all of 2022, NAR reported last month that the existing U.S. home sales fell 17.8% from 2021. So this is a national number. And that was the weakest year for home sales since 2014 and the biggest annual decline since the housing crash began in 2008. So this is true, but it's a little bit sensationalized headlines because we had such an incredibly different market last year compared to what we're seeing this year. And if we bring it to our daily interest rate, it is up to 6.88%. That is a pretty significant jump from the 6.5 that we saw on our weekly average mortgage rate. And we can see that jump here from October, November, we were kind of ticking down fairly rapidly, a little bit of a pop around Christmas, New Year, and then we dropped down below 6 for a single day. And since that right around that time, we had a really strong jobs report pop out, and we just shot up on our interest rate here. Although I do think this is going to be temporary, it's a little bit of a shock based on all the numbers that are coming out. The consumer price index not registering quite as low as people expected the inflation numbers to be. And just a few reports that gave some surprising numbers, and that has affected the market. So we are seeing that limited buyer demand. We have seen the buyer demand decrease from what it was a couple weeks ago, a little bit. If we pop above 7%, then we will see weak buyer demand. But that 6.5 to 7 is a limit. There's still buyers out on the market. These are the buyers that want to go lock something down and refinance when rates go down, which is a very smart move because you're not competing with as many other buyers. But once we drop below that 6.5, it reaches good buyer demand. Below 6, it's going to be very strong again, and prices will go back up. Just a reminder, register now for my class on Monday in person at the Brewmasters Tap Room in Renton at 6 p.m. on Monday. Come on down, have a drink on me, and I would love to share this whole story with you, as well as home buying for nurses and teachers on March 6th. Make sure to register for those to save your spot now. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area, an area you're interested in, any general questions that you may have. Let's sit down and chat. I would love that. All right. Thank you so much for joining me for your South King County real estate update. I'll be back next Friday afternoon with your local real estate update. I will see you then. Have a fantastic week and see you at the renovation workshop on Monday.